Literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
Good day, everyone. Good morning and salutations. It's your boy Reckless Ray De Niro here for another episode. Well, actually, this isn't an episode of Future Financial Strategies. This is a special that's tied to Future Financial Strategy. That's a monthly update on our dividend portfolio. So this is a portfolio update episode specifically, which means that we're just going to deep dive into the portfolio. These episodes could be short, could be long, depends on what's going on that month. And yeah. So let's jump right into it. We're going to start off with the acknowledgments. So first and foremost, we want to acknowledge one of the primary sponsors of the show and the platform, Dividend Tracker app. They found me because I'm a crypto guy and I know what I'm talking about, but they also house your traditional finance brokerage account metrics in there as well. You can get some deeper insights if you have the pro version. There is a link down in the description. I don't get anything from that at all whatsoever. It just lets them know that you found them via me. And not only that, actually it is only that because I don't get anything out of it. The sponsorship is actually for me to have the pro version of the software to have. So, win for me on the front end, but I definitely want to overcompensate them for taking a risk on a little known channel, little known guy. For some odd reason, somebody on their crypto side marketing team found me, and here we are. Also, for these episodes specifically, we will be living out of the Dividend Tracker app, which is super useful. There are a lot of really interesting things that you get in the pro feature. It's a tool that I think if you're taking dividends seriously, you should consider working out of, because it has a lot of stuff to help you kind of plot out, check positions. You can test positions, all that fun stuff. So before we get in, so we're through the acknowledgments. So I want to do a little conversation, because that's everybody that we got to acknowledge. We got, obviously, the Wolf Pack. Acknowledge you guys. Chat lives matter. Definitely appreciate you guys touching base with me in the comments, asking your questions during the premieres, because you know that I'm not always sitting in there because I've got a business to run, and I'm normally working. But I wanted to do it first thing in the morning so I can catch you guys fresh, so I can put some good ideas in your head the first part of the day. So shout outs to you for that. Shout outs to the Bag Chaser family, as always. And shout outs to the family over at Circa 84, which I am a moderator over, the Crypto Czar, if you would, because that's what I eat, sleep, and poop every day. So yeah, let's dive right into it. First thing I want to talk about, obviously, we're probably going to touch on this the first few months of this, since this is a monthly show. First Monday of every month, we should be updating this, provided all of our dividends are in, because I like to give you guys a full spectrum dividend update for the previous month, which I also need to pull up. Booyah. Okay, so we got that. Okay, so now that we're set there, income portfolios, dividend portfolios. Now, I have coming from the crypto space, obviously, I liquidated all of my stocks, all of my retirement accounts, all of everything, and went headlong into crypto. Having been in crypto for a decade, we look at things a little bit different, because everything that we test is on a hyper accelerated timeline as compared to what these slow moving steam engine, barely even steam engine, almost horse drawn, traditional finance guys, the pace that they move at. So the looking at things it's almost like night and day. It's almost like speaking Chinese. You come back and I delved into the content because when I was rebuilding my portfolio out, I was like, okay, I had a couple ideas, and then I kind of thought I was crazy because of my ideas. And then I was like, am I looking at this wrong? And then I found my tribe of people in the high yield dividend corner of the dividend space. And it's a weird niche corner, which is crazy considering that the people who have much larger channels talk about dividends, but they're growth stocks that happen to pay dividends. And I look at it, and this is just, I understand. I'm not saying I'm 100% right, but for the last over a decade, I've been right about Bitcoin, and I've got a pretty good grasp on how money works, considering the business that I'm part owner in. We only work with actual rich people, and they're never online. So in the real world, touching grass, that basis. But when I'm looking at a lot of these spaces, it's a lot of information and content that are telling people, and I understand that these large channels, they're making content for the lowest common denominator. Understandable. And they're incentivized to probably not tell the truth. Also understandable. And most of the time, these guys at least seem as though they're already rich. Like they've already got a lot of money. If most of your money is coming from either YouTube or whatever, or however that's working out, or you got a bunch of money and then all of a sudden you're like, oh, look, I'm playing with a 6-figure portfolio, but I really only care about growth, but I want to talk about dividends to get into the algorithm. Totally understandable. Okay. But my methodology and my ideology on an income portfolio is you are trying to generate as much money as possible every single month. That seems to be the focus. And it's not necessarily hell or high water of a focus, but it's like, if there's tools that exist in the market and you consider yourself a dividend investor and you want to speak on dividends and you want to put yourself in that guru lane, then I'm expecting that you've done your 10,000 hours of research. And a lot of times it seems like on a lot of these channels, like when I bring up high income ETFs, people are like, what are you talking about? And I'm like, you don't know that there's people that hedge funds that run the options market and make money, and then they split the money with the people that fund them to be able to put their options out. Y'all don't understand that? And then they tell me I should have a hedge fund. I'm like, maybe I should at this point, because I'm like, if this is just what we're telling people, and especially people who want to talk about whether you can retire or live off of this income and the timelines on how long it takes to build up these portfolios, or how you could utilize that as we talk about over here, a futuristic financial strategy, or a future financial strategy, or a present time financial strategy to achieve your goals at a faster clip, or how you could utilize that portfolio to do some other stuff with it. Like, for instance, I'm using mine to clear debt because I want to front run the income. And why am I doing that? Because I don't want to have to touch my Bitcoin. Like, I don't want to have to dip into my Bitcoin. I don't want to have to dip into anything that I've accumulated that's in my retirement ledger and my cold storage. I don't want to have to touch it. I want it in there. I want it to appreciate in value. I want that to be a backstop until we get the ability to take loans against Bitcoin back in the United States, because we used to have it and that's how I used to utilize it. But until that happens, I'm not touching it. I'm never touching it again. I never touched it the first time. I want to use it like I use my house, as a source, as a debt tool. I don't want to spend it. So until we get something of the like, I'm not intending on touching it, because we previously had that tool. That tool exists outside the United States right now. It just doesn't exist here because they disincentivized it to hell and disallowed it, because they don't want you to have freedom to use your finances and your financial tools as you see fit. So until it comes back, we're just letting that stack. Now, my portfolio also specifically is built with my narrative, and we're going to jump into that. There's two things that I want to show, though. Specifically, we're going to go in because I know the first jab they're going to take is, oh, well, you didn't show actual receipts because you like working out of the dashboard on Dividend Investor Tracker app. So we're going to go ahead. I'm going to show you my Charles Schwab because I did a little bit of gambly stuff this month that did not work out necessarily in my favor, but I have a strategic move that I wanted to make with these funds. And since I had all of the money predominantly in my income account, I had to do this play within the income account. So we're going to move over here and we're going to take a look at what we've got going on. So that's going to move us into the portfolio update section. Okay. So we're going to bring this to the stage. We're going to make me small and call it what it is. Okay, so this is looking inside the actual Charles Schwab account. It's the account. So as you can see, we are down in the income portfolio, $414.66 on the assets themselves, the underlying assets. Granted, this month we pulled out, and I'm going to give honest numbers again, because that's what we do over here. We tell the truth. Guys should maybe do that. And also we say when we don't know something, like it's not hard to say you don't know. I don't understand. I do understand, because the gurus are trying to sell you stuff or get you wrapped in so that they can sell you stuff. So they just have no incentive of telling the truth. It's not a documentation of a journey. They're talking down to you from the top of the mountain. I'm in the mud with you. Listen to who you want, but I'm just saying, we're going to tell you the truth over here. So this month we had a cash out of dividends of $382. Which we are using to take care of one of our debt tools. That's going to close out our Cash App Advance debt tool. Now, if you guys haven't tapped in with me before, definitely hit the like, definitely share the content, and definitely subscribe. You should tap in because I give game for everyone over here on Future Financial Strategies. But one of those strategies is a debt tool that we utilize that is Cash App, because they give you cash into your Cash App account for a flat rate. Currently it's 6%, over 6%. I do not utilize the tool. It fluctuates with the rate. When I started utilizing it, it was at 5%, which was even better. It's at 6 now, which, compared to the rates for what you get on other things, not too bad. We have a $650 draw on that. We got $200 that we're paying back on that. And out of that $382, we reinvest 30% of it goes back into the portfolio. A little bit of it, 10%, goes over into the long-term holding portfolio to throw some stuff over there. We've got a little play that we're working on over there. That adds to that portfolio. And then 20% of it goes back into the fund itself to grow it for right now. For right now being that once we clear all the debt and we are out of the debt tools, this portfolio will then roll over into self-funding itself and or positions in our long-term portfolio, which is where the growth stocks are, some of which may have a little bit of a dividend on it. Actually, I have a couple of plays because I like income. I like the income. I'm not going to lie. I'm an income guy. I got a couple of plays in that portfolio that are going to go in that portfolio that are going to be income generating, just because that is the motive for me for this. Second thing that we should also touch on, since we're talking about the portfolio, is the intent, again, to not touch my crypto until I can leverage it. And either legally in the United States or until I get residency set up somewhere where I can utilize those tools, which is also in the works. So, with the way that things are going here in the U.S., having a single passport is not going to cut it for me, because I do have one of those. And we're going to be setting up a secondary passport, because it seems like they're just trying to keep people from being able to utilize all the tools available, as though they want you to not succeed or get wealthy. And we're not having that. So we have the $382 come out of the portfolio. You guys see that we're down a little bit. The play that we made within the portfolio, we did two things. One, I had stuff in this portfolio that I started in last month as we were building this out, because we did a massive dollar cost average. We did a debt tool move to put $8,000, the majority of it. A little bit went to crypto. Most of it went into the portfolios to get these portfolios set up. So we had we utilized the debt tool, doing the credit card cash advance conversion to make cash in our account out of our credit card. 0% interest, but they charge you a 4.5% flat fee. I like flat fee debt. and then you just pay it back within the window, and you don't pay any interest on those funds. Now, I understand that that's not for everybody because it takes a lot of financial discipline. Fortunately, around here, we have it. We've already used it and closed out one on the Discover card. We did it off the Discover for $10,000. We've already paid that back. It was supposed to take 10 months. I think we got it done in about, I'd say 8. I think it was 8, a focused effort. You know, we made some good plays in there. So as we rounded that out, we went ahead and rolled right into the next one, which we did for $8,000. And we are currently working on that. Now, things that we did. So I wanted to get in on this NVIDIA stock split. And for some, I got real hype on it. I made a play early. I made a play for a little bit more than what I needed to. I bought 2 extra shares. I needed 2 shares because I wanted to have 20 because this is going to be split up into the family fund that I've got going for my great niece. We're doing a little familial experiment there to try and change the generational paradigm for those in my family. Something that I've taken upon myself, a little side project, but I think I'm going to use those to cover myself for that portfolio for the year. I think we're going to have the majority of it, a good chunk of this. I'm going to get 10 shares of NVIDIA into that portfolio. The way that portfolio is going to work is I put 1 share of stock per month, so 12 shares a year. I'll focus in on one thing, whatever the paradigm is for that month or for that year, and I'll get 12 shares of that. So like basically every year there'll be another fresh 12 shares. And I think this year we're going to have it be NVIDIA Corp. And she's going to have 12 shares sitting in there for a decade. Then she'll get to manage it. And then when she turns 18 and graduates high school, she will get that handed over to her, provided that she's met the qualifications to get it, which is basically understanding how money works, understanding how to manage the portfolio, and then graduate with a lump sum of money and a portfolio to get started off with. So there's going to be that. And then I'm going to keep the rest for myself. It's going to go on my long terms. And yeah, that's what we're doing with that. We just had to do it out of this pool because this was where all the money was. So we're sitting in here. We've got this portfolio, which is sitting at $15,900, which the cost basis of it was $16,314.81. The other thing that we did was I got my portfolio narrative base. So you can see everything in here. And we're going to go ahead and switch back over. I like this view a little bit better. Over to the tab. We've given the receipts, $15,915, $15,915. Go ahead, at me, bros. Let's talk about it. So what this is the Dividend Tracker. This is a tool that I highly recommend. It is a very clean view. They have both desktop and iOS and phone and tablet apps, both very useful. I prefer to function out of the desktop primarily. I just use the phone to basically do screen grabs and be able to check and update as we're going. We'll see how that goes. I'm enjoying it so far. But the positions that we have that we've condensed down into, we got rid of YMAX. The reason I did that is because A, it wasn't narrative based, and B, looking at the income it generates, it was not the highest, so I moved it down in the priority list. YMAX will be coming back for sure. If not in the long term, definitely in this one, because this isn't going to be a 3-item deal. It's going to probably end up with like 5 or 6. I'm not understanding how people are getting into the 10s and 15 positions as though it's just a random stock long-term hold portfolio. But that's just me. And so I did a little bit of calculation on my end, and I was like, YMAX was a loss leader as far as income, not as far as the stock itself. I do like it. I don't like it for my core, the first $30,000 that gets in here. And so like we're about 50% through this. And I want this to be the way that I want it to be. So we started with YBTC. Now, after doing some more calculations, I'm like, YBTC has been having a couple of rough, well, not rough. They had I think it's the 3rd highest dividend payout. It's just in comparison to MSTY or Coney, CONY by YieldMax. Those two are workhorses. And when I went through the YieldMax deals, I was like, hey, like let's take a look and compare this to some of the other Bitcoin related products that I've got, because I have a narrative on Bitcoin. And I think over this next 14 to 20 months, there's going to be some magic happening. It's going to be some portfolio saving magic, in my opinion. And I like being a part of that. The drawback of that is this: you get these months and days and whatever and weeks where it's just if Bitcoin goes down, all of my positions in my portfolio go down as well, which I'm used to because I'm in crypto. And this down 2.61% is nothing. It's absolutely nothing to me. Like, I don't understand how you guys freak out about that. I also don't understand how people get happy about 2%. Like, it's crazy. But since all I'm looking at is the income, I'm going, well, the volatility is good. So like seeing this, you also have sell-offs after payouts and whatever for people that like to game the system and just jump in and out of these positions, which fine, I get it. But the piece of this that I'd like to impart is I am not a hedge fund. Matter of fact, I am utilizing hedge funds. These are actively managed portfolio ETF positions. They do covered calls on a position. You can do covered calls within your portfolio as well. I'm just not good at it. Nor do I really want to take the time to be in and out of the market daily messing with this. That's just me. But they do. And I'm assuming, considering they have a career at doing this, they're pretty decent at it. And so far, they've been paying. So what I've done is these three core positions. YBTC is literally covered calls for the Bitcoin ETFs by Roundhill. And YieldMax has one that's covered calls against MicroStrategy, which is a heavily Bitcoin influenced stock. And then you have Coinbase, which is also crypto Bitcoin related stock. When the Bitcoin bull run happens, when Bitcoin does well, these positions do well. All three of them. When Bitcoin does bad, all these positions, the underlying the asset position goes down in value, but the ups and downs are where you make your money in these covered calls. So with that said, once Bitcoin gets back up, this is no longer an issue. A few weeks ago, we were plenty in the green, looked real nice until Bitcoin dipped. Then everything dipped with it. I've been watching these since I've been in them. And you can look at the stock. It's also reflected in the stocks. Like Bitcoin does bad, MicroStrategy does bad because they're holding a ton of Bitcoin in their cash reserves, which affects the valuation of their company. Coinbase also holds Bitcoin, Bitcoin related, Bitcoin ecosystem. They tie Coinbase to Bitcoin. Another one. I believe that over the Bitcoin halving bull run, which we are currently embarking into, which is going to be 14 to 20 months, that there's going to be some definitive upside and a lot of money to be made holding these positions. So these are my cores. I also cut out QDTE, weekly payer. Why? Because I just didn't I'd started the position and then I was doing the math on it, and it was another one. Like, while I like it, the S&P 500 is not going to do as well as Bitcoin, especially during this period. Historically, it hasn't for the last 15 years since Bitcoin was made. Bull run wise, the S&P 500 does not match the market, does not match Bitcoin, period. Like, it's just not even a question. So I got rid of that as well. It will be coming back in at a later date. Reason being is because the income that we're generating, which they're projecting out for June, I got 382. And the other thing that I screwed up on was I got into the MicroStrategy position, and now looking back, what I should have done was rode out the YBTC. I should have just consolidated everything to YBTC because it hadn't paid yet, and then sold off some of the YBTC after I got paid at the end of the month with the payment there, because I could have drove that dividend income up. Then I could have split off into Coney and Misty. I did not do that because I wasn't paying attention, and strategically, like, this isn't something that I paid attention to the way that I pay attention in crypto, because realistically, the margin for error on this was like, well, you didn't make as much dividend income as I could have towards the end of the month doing the shuffle around, which I'm okay with. Like, it's not like, hey, you weren't paying attention, you just lost a few $1,000s, which does happen in cryptocurrency. You send something to the wrong address, you send something into the ether of nowhere, you lose money. So, just being patient and waiting, we're going to see what next month is looking like. The dividend yield at present for this portfolio of $16,000, just under $16,000, is 63.21%. Yield cost is 61.6%. June projected income right now, based off of the previous payouts. This is not a projection of what this software or this platform thinks it's going to be. It's a projection on what they believe it could be based on the previous payouts. Now, if the dividends go down, obviously this number fluctuates. So I always undershoot it. But so far, it's been ballparking for what I got last month, because YBTC I've been sitting on for a long time, since its launch. I found this after the Bitcoin ETFs went live, and I'll probably be looking for another position, one similar to this, once the Ethereum ETFs go live, to start putting money into, because I look for cash flow in these portfolios. I do not partake in the direct Bitcoin ETFs because I am a Bitcoin holder. I've been in the space for 10 years active, and there's just no point in bringing a middleman into that. But the income that's to be made on the other side of that within the traditional finance market, I do want that, because I can use that income to buy more Bitcoin at a certain point, or pay my bills. Now, with that, based on the dividends, now this number regularly changes, because if you have a good month, because for instance, YBTC, when I first started getting a good amount in here, had the best payout that it's had. It had a really good month on their covered calls and against the Bitcoin ETFs, and they had a payout of $4 a share. So when I first got in, the payout that I got this month, which was predominantly YBTC, was almost as much as when I had a smaller position and they had that really good month, and they had a $4 per share dividend. Now, obviously, that's not consistent, but it's nice. And you have the ability to do that, because what you are doing is you're gaming the market. You're going, hey, these people are actively trading to produce an income. Is the income going to be consistent? Absolutely not. I will not say that. If you want consistent income, then you would want to have a portfolio of growth stocks that happen to pay a dividend. That's not income focused, though, because what we're doing with a portfolio like this, I like to call this a spearhead portfolio. It's similar to what I do in crypto. You go in, you get income, you use the income to build up the portfolios that are going to be slower moving, but you need something at the front to kind of help you get going as fast as possible. Like if I had to save up an additional $800 and something a month, that could be a problem. But I could put together a portfolio with a nominal amount of money. Because like, if you've been over here, I tapped in with you guys on what the opportunity fund is and working your way up to it. My current opportunity fund is $10,000. I'm constantly in a game to save up $10,000. I try to have it done more than once a year. We're down to a point now to where, with the way that we have our budget set out, it's about every 10 months I get that cash infusion. But like, we're also utilizing debt tools and a bunch of other stuff to kind of front run that, so that way we're getting to do more than one of these a year. But building up a portfolio like this is that could generate, and I always tell people it's like around I'd say around 700. It's 837.51 based on this month's payout. If I would have got everything, that's what I would have gotten this month if I would have been in these three positions for the entire month of May. Going into June, though, they're projecting 837.51. Now, will it hit those numbers? We'll see. Why Misty and Coney pay on the 5th and the 7th. Let's go over to the calendar and look at what my payout calendar looks like right now. And this is another thing to consider as well, is like, how do you want this income coming in? Like me personally, I kind of like the lump sum at the end of the month, but considering these are heavy hitters and this is what they're projecting, they're my Coney by YieldMax, they're projecting 171.05. That's going to pay out the 5th. That's in what, 4 days? 4 days. We'll be getting that first little chunk of money. Then you move over to Thursday, the 7th. We're looking at Misty, supposed to be paying out $297.82. Then when we get to the end of the month, the 30th, YBTC will be paying out $368.64 based on last month's numbers. And as those come in, we'll go ahead and chop that up, move it over to the long-term portfolio. There's going to be a little bit of money sitting in there, and then we'll kick out what we are owed to ourselves for debt repayment. And, we're going to start filtering that in to chunking down some of these debt vehicles that we've acquired to allow us to invest faster and pay back the debt. And then we've got the vehicle still, and we'll continue to follow it that way. But we'll be getting an update similar to this. The first Monday of every month is what I'm shooting for to do this specific episode for portfolio breakdowns. And, we'll see how it goes. I'm not saying that I'm 100% right, but sitting out here saying that like, oh, the only thing out here is these growth stocks or growth ETFs that are pulling in the slowest dividends possible because they're trying to go, hey, we're trying to match the S&P 500, which also pays out a nominal dividend. And then saying that what you can and can't do within those parameters. Well, like, yeah, if you're going towards the stuff that you like, if I had $1 million, that would make sense because 2% on $1 million is a decent amount of money for most Americans. But for the people that are getting it out of the mud, the information that you find if you look up dividends on YouTube and you get into that algorithm are people that are growth stock focused. You are just growth focused. They're growth focused. And a lot of the people who are looking for dividends are looking for cash flow. They're looking for income. They're looking for something to like help them speed this process along because they do not necessarily have the means to just go get more money in this economy. Everything's more expensive. It's like the strategic moves that you're making with your money and then the strategic moves that you make with the income that you get from said money are so important that it's just crazy to me that when you look up something that's supposed to be income focused, the discussion is not around income. And then when it does become around income, they want to get mad. It just doesn't make sense unless you're lying or pushing some sort of agenda. And I don't know which it is, or if you're just trying to keep up appearances because you can't be wrong. Like, these are all options. But over here, we're going to have a truthful conversation. And you know what? If the portfolio crashes, which I'm sure some of these guys, because I comment on all the financial videos that I watch, I do. I just make it a point. So I'm active out here in these YouTube streets. I ain't going to lie. I am. And I'm not above reproach, nor am I sitting out here saying that I'm right or putting myself in the position of a guru. I'm just saying mathematically, if we're talking income, then, and you're not making income on a portfolio on a good grip of money, then like there's a discrepancy there. And I think that there's a conversation to be mined out between the people in the high yield space and the people on the other side of this. And I think it boils down to intent. But like when it comes to intent and efficacy, there's plenty of us that are over here on this side of the street documenting, showing receipts. So if we're going to talk math, let's talk math because this is just math. There's no emotions in this. I am also putting into long positions that also happen to pay dividends that are slower moving than my income portfolio, but the income portfolio's focus is income. That's all we're saying. And so for those of you who are looking for income, the guy's trying to push growth and telling you that like, oh yeah, you just got to do this for forever. And maybe when you're 70, you can retire and then die in 2 years. Or you just put all it just doesn't make sense because that style of portfolio, while yes, they do produce some income, is more of a hedge. You're trying not to lose the value of the underlying asset. Like you're trying to, it's not 100% income focused at that point. So that's where we're at with that. So moving on to the last section, I hope you guys have enjoyed. If you have been enjoying, definitely hit the like. I do set these up as a premiere, so if you have questions, comments, you can hit it down in the comments. I will see them. If I'm not sitting in here with you, understand that I do get the notifications. I do check them immediately, and I do reply. So, yeah, let's jump on to the last section, which is the bonus, which is the investor outlook. Let's talk about two things that all of you who are investing should be checking out the week of June 2nd. Yeah, it's going to be June 2nd. It's the week of June 2nd. The first is a Saturday. So that's why. Week of June 2nd. The Federal Reserve interest rate decision and economic projections. The Federal Open Market Committee, the FOMC, is expecting to hold interest rates steady at its next meeting on June 12th. Keep in mind, that's the 12th, people. That's going to be a big meeting. It's definitely going to affect the markets. You should be looking at that. This decision is crucial as it will provide insights into the Federal Reserve's future monetary policy decisions. According to the sources, there is currently only a 10% chance of an interest rate cut in June. But this probability increases to 30% for July and becomes likely by September. Investors should closely monitor the FOMC's updated economic projections and any statements from the Fed officials, as these will offer additional guidance into the potential for rate cuts later in the year. Yeah, I don't think we'll be getting a rate cut this month. And I think the market's gonna reel a little bit. It's gonna go down a little bit, most likely. I might be saving my dollar cost averages until after the 12th because you might get better prices. That's just something that I'm looking at, as a potential. I really wish I would have waited to buy in on that NVIDIA position. That was a mistake. But again, I'm not a stock investor. And also, I'm not selling any of what's left. It's like we took the hit on the initial two, which is cool. You know, we'll get a, that'll count against my gains for the year. And, you know, cut against some of these dividends. And we'll call it good. Economic data. We need to look at the economic data, the consumer price index for May, which will be released on the morning of the Fed's decisions, could influence the Fed's stance on the rate cuts and the potential future rate cuts. The other thing that you guys need to be taking into account is mortgage rates and housing market trends. Mortgage rates have been volatile all throughout 2024 thus far, and the upcoming economic data and the Fed's decision will significantly impact these rates. Investors should pay attention to the following. Mortgage rates forecasts. Got to know where things are going, where they think they're going. They're gonna sprinkle us with some hope. Hopefully they don't sprinkle us with some dread. But experts predict that mortgage rates could trend downwards if inflation continues to cool and the Fed signals potential rate cuts. However, if inflation remains persistent, mortgage rates could stay elevated or even increase, that's gonna shake the market. I don't know that it's gonna shake the mortgage market though. Like I think more or less most of the people, because in my business we are currently going through a slight downtrend, and our builders are going through a slight downtrend. And I'm not talking about houses for average people. I'm talking about houses for the 1%. It's $1 million and up homes. And people seem to be waiting until after our upcoming election to see what economic state we're going to be in. That said, I don't think that at that echelon, things are going to slow down much at all once we figure out what economic scenario we're going to be living out for the next 4 years. Reason being, it hadn't slowed down under Biden before. That's basically why. Like, we haven't been slow since COVID. And during COVID, we weren't slow. We had 2 weeks of what's going on, and we thought it was going to be slow. And then people just started upgrading their houses. And then people just started buying houses again. And they've continued to buy houses. And we've been very consistent up until now. And the reason is, now there's a potential chance that we could be in a different economic environment. Now, do I think if we get a different administration and we get the current administration voted out because they're kind of a little bit on the side of inept when it comes to financial policies and everything right now is financially worse for everyone? Yeah, I think we'll get busier. Do I think we'll get less busy if we keep the same as what we've got? No, because everybody's already adapted to the current environment and the people at the top are still buying shit. They're still buying houses. They're still throwing them up. They're still building these multi-million-dollar monstrosities. They're still getting their in-home theaters. They're still getting their home automation. I think they're just waiting because there's a potential chance that they could get a better deal, which I don't blame them. If you're rich, you can wait a few months. And that seems to be what they're doing. Housing market dynamics. Spring and summer months typically see increased activity in the housing market. Prospective home buyers and real estate investors should be prepared to act quickly as the market remains competitive despite lower demands from the previous year. People are still buying stuff. Moral of the story. And we're gonna call it on that. Thank you for tapping in. Again, make sure if you enjoy the content, you hit the like button, share it with some people that you know. There's always more room over here in the Wolf Pack. And if you're a new watcher, definitely make sure to subscribe. Until the next month, it's your boy Reckless Ray Dinero, and I'm out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name. But I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.